Happy Wednesday. This is a weekly update on my $500,000 portfolio that I'm trading to $5 million. So far this week, we've seen a divergence between big tech led by Apple and Netflix and blue chip. For the week, I'm up $4,300. Most of the gains are from my QQ March 2022 expiration call options with a $325 strike price, and it's up almost $3,000 and contributed to most of my gains. The non-option tech winners this week are Apple, which is up 3%, and Netflix up over 2% week over week. The rest of the tech stocks mostly ended positive week over week, with AMD being the biggest loser out of the group, down almost 1.7% week over week. Biggest tech loser is Apple July 30 expiration cover call with a strike price of $137 and is down 25%. This is expected given Apple's continued rise. Apple is a wheel play, so I don't plan to roll or close my cover call position. However, I did write a Apple July 30 expiration cover short put with a strike price of $136 and received a $85 premium. I don't think Apple will drop down below 137 by expiration, so the premium I receive for the cover short put reduces the loss that I'm incurring on the cover call. And in the event that Apple does drop to 136 on expiration, then the $1,156 loss that I'm incurring on the cover call would become a $108 gain, and I get to purchase another 100 shares of Apple at $136 a share. Non-tech stocks were again a mixed bag week over week, with Visa and Goldman Sachs up 2.4% and 1.8% week over week respectively. On the other side, each of Lockheed Martin, Lowe's, and Exxon Mobile ended down 1.5% or more week over week. I've been talking about buying more Goldman Sachs, and instead of buying Goldman Sachs at the current price of $374.40, I sold an August 13 expiration Goldman Sachs put with a strike price of $365 and collected a $761 premium. If Goldman Sachs closes at or below $365 on August 13th, then I can reallocate some of my funds to buy another 100 shares of Goldman Sachs at $365 a share, or I can roll out the put and collect additional premium. I also bought 20 shares of Exxon this week to increase the total dividend payout of 12 stocks that I hold between this portfolio and another more dividend-focused portfolio to $10,000 a year. Feel free to click on the links I provided if you wish to watch my videos on dividend portfolios, which are beating out market gains while paying over 3% in average annual dividends. Earnings season is finally here, and I'm interested in learning about not only how companies have performed over the last quarter, but more importantly, how they will navigate the post-COVID environment and respond to rising inflations. I am sticking with my prediction that big tech will outperform in the second half. Let me know in the comments below how you are trading during earnings season. And as always, thank you for watching this video, and please hit the like and subscribe buttons.